Stocks have been dropping during the past months, but not all stocks, just very similar ones right after delivering excellent returns in 2020. Why? Well, because we are seeing money moving from those growth spec stocks to more long-term blue chip stocks, and that is actually creating an opportunity. But it is important to notice that this is why I am always telling you guys in my videos that diversification is always a good option, because as I said in my Instagram story, even though I'm down in some of my new growth spec stocks such as Fubo TV or Wish, I am also up in many more. But this downturn is creating a nice investment opportunity. Hello everyone, so in this video we will talk about 5 stocks that are undervalued in my opinion and might be presenting such excellent investment opportunity in the long term. I have already talked about some of these stocks and I'm actually already investing in 3 out of the 5. I do want to say that there are many undervalued stocks in the market right now, and if I don't mention one of them here does not mean that I don't think it is a good buy. Please let me know in the comment section below if you have any stock in particular that you would like me to do a video about it. So the first stock in the list is Peloton, ticker symbol PTON. We all have seen how Peloton stock is almost 40% down since January. CEO Peloton is a company that has been having excellent growth throughout the past year. Obviously, the pandemic helped with an acceleration in growth since everyone was at home, gyms were closed, and people started buying this kind of machinery to do exercise at home. Their connected fitness subscriptions have been having excellent growth quarter over quarter and year over year, as well as their quarterly revenue, even though they saw a decrease for the quarter 4 2019 and quarter 1 2020, they have also seen an incredible increase after that. Now, the stock have been dropping lately because of bad news, since the US Consumer Product Safety Commission warns consumers to stop using the Peloton Tread Plus because of the danger of popular Peloton Tread Plus exercise machine after multiple incidents of small children and a pet being injured beneath the machines. First of all, I do want to say that obviously I'm very sorry that this happened to a kid, because it should have never happened. But just as the CEO said, he sent an urgent reminder directly to Tread Plus members to follow the critical warnings and safety instructions that accompany the Tread Plus, which state that children, pets, and objects should be kept clear of the Tread Plus at all times. Members were also reminded to remove the Dafty key and store it out of the reach of the children when an adult is not using the Tread Plus. Again, this is very sad, but the thing is that it is obvious that kids and pets should not be around any kind of this machinery. Not only treadmill, since they don't know how it really works or the danger of it. I remember when I was a kid, we used to have one of these electric treadmills at home, and my mom would never let me turn on that thing without her and would take out the rat security thing that they have on top if she wasn't around. Again, don't get me wrong, I know this was an accident that should have never happened and it is very sad, but obviously because this happened to a very popular company as Peloton, it is all over the news. This is obviously huge for the media right now, because when a company is that popular, they would make it a bigger deal. The accident occurred in March and we still see news from 2 days ago because the warning was released on April 17th. But this kind of things happened with Apple when they started, with Tesla right now, with the accident that happened over the weekend. When a company is this big and popular, the media will make a bigger deal out of everything. Everything could happen with kids every day. That is why people cover their swimming pool, for example, in case their pet or child falls in. These are accidents that happen but should be avoided. While doing research for this video, I knew that this was not the first time that we saw this kind of news. And I started looking for news from 2018, and guess what? In 2018, the same thing happened to a 5-year-old, and it wasn't a Peloton Tread Plus treadmill. What I want to say with this is that this should not affect Peloton, because it is not the only treadmill that has caused this kind of accidents. Maybe as Peloton is so new and innovative, then maybe they could do a safer update on their hardware or software to make it harder to turn on to the treadmill with a password or something to avoid this kind of things. But I think that we should focus on the company fundamentals and growth and know that this drop in the stock is actually an opportunity. I strongly believe Peloton will be a big winner in the long term. I'm not talking about in a month, 3 months, or the end of 2021. I'm talking long term because I'm a long-term investor. Stock number 2 in today's video is Alibaba, ticker symbol BABA, the Chinese e-commerce giant. This is a stock that has gone through tough times lately because of some regulations, but the stock is down almost 30% since the highest level last year. It is not a secret that Alibaba has also had excellent revenue growth year over year, and I don't see that slowing down anytime soon, as e-commerce is still an industry that has a lot of room to grow. Alibaba received $3.6 billion fine as China tightens regulations for big tech players. They were hit with a record antitrust fine of 18.2 billion yuan, equivalent to 3.6 billion Australian dollars, over the weekend for supposedly abusing market dominance. The company, which operates a digital payment platform Alipay and offers bank loans to entrepreneurs, issued a public apology saying that basically they accepted the penalty with sincerity and will ensure its compliance with determination. If you ask me, they did this because it was China. Also, Chinese tech stocks have been hammered as US law threatens to delist firms from American exchanges. We have talked about this before. This was because of a law that passed last year, which said that certain companies were going to get audited by US watchdogs and will be required to submit certain documents to demonstrate that the company is not owned or controlled by a government entity. And if any of these Chinese companies fail to demonstrate that, US regulators could stop the trading of any of these public companies, and obviously that is scary to any investor. Now, even though that is a risk, both regulations in China and regulations in the US, I think that Alibaba is actually creating a nice opportunity to invest right now, because it is not a secret that China is a leader in online shopping. Their online shopping increased 21% right after India, that grew 22%, but China has a total of $2.7 billion in e-commerce sales. The nearest one is the US, and it doesn't even have $1 billion. Also, China already has 52.1% of their retail being online, while the US is only 15%, and it is expected to grow to 55% next year. With all that said, stock number 3 is a group of 2 stocks that are also within the same e-commerce industry but focus outside of China, and these stocks are Amazon, ticker symbol AMZN, and Context Logic, ticker symbol WISH or WISH. I know I have talked about these stocks lately, but I do have to say that they are, in my opinion, a nice investment in the long term. I already own both stocks and I'm planning on holding them long term. Now, I added these 2 stocks because even though China is the leader in e-commerce, the US is in number 6, which means that it still has even more room to grow in the coming years. Both Wish and Amazon have had excellent growth in the past years and obviously saw a huge acceleration in 2020. I do know that Amazon is a way bigger company with way different type of businesses, since they also focus in cloud business, streaming, autonomous driving, and many more. But their core business is e-commerce, and I think they still have a lot of room to grow and expand within the industry. Stock number 4 in the list is TTCF, ticker symbol TTCF. I have also talked a lot about this company lately in the channel. I have invested in this stock and I have been adding little by little to my position during the drop. TTCF is a plant-based company that has been having excellent growth since 2017, since they started with the TTCF brand, which I think it is incredible. The plant-based food market is worth $74.2 billion by 2027, growing at a CAGR of 11.9% from 2020 pre and post COVID. I do think that the TTCF is at a very nice price right now, and it is undervalued in my opinion. I'm no financial advisor, but right now the TTCF is trading at $17 per share with a market cap of $1.37 billion. It has a forward P of 62.96 and a price to sales ratio of 9.28, while if we compare with Beyond Meat is currently trading at $131.97 per share with a market cap of $8.38 billion. It has a forward P of 1,649 and a price to sales ratio of 20.61. With this, I'm not saying that Beyond Meat is a bad investment, but I do believe that the TTCF has a better valuation right now, in my opinion. Now, I do want to see how they did in Q1, but I do like this company for the long term. Stock number 5 and the last one in this list is another growth stock within the MJ industry. This stock is TrueLive stock, ticker symbol TCNNF. I have a video analyzing it more in depth, but it is a cannabis stock company based in the US. It is the leader in medical use in Florida, but it is rapidly expanding right now. They are available in 6 states, which means that they still have a lot of room to grow. Right now, the stock is down 25% since it's trading at $39.24 and has a market cap of $4.62 billion. I like this company a lot because even though they are growing massively, they are expanding in other states, and with Florida, they are profitable. They are a profitable company, and it is really difficult to find such a growth company within the cannabis industry that is profitable. And I actually found that incredible. I do recommend you go and watch my video analyzing this stock and comparing it with other cannabis stocks within the industry and do your own research. But I do think that the cannabis industry is a high growth one that is presenting a nice investment opportunity for the long term, and everyone should take a look at it. Now, I do have to say that I'm no financial advisor and that I'm a long-term investor, which means that I don't really care about a short-term move, or if a stock of mine drops, then it is time to add to my position and not panic sell if nothing has changed within the fundamentals of the company. Obviously, there are other stocks worth watching right now, such as Teladoc or FuboTV, for example, which I'm also investing in them right now, but I think these 5 stocks that I just mentioned are undervalued as well. Now, what do you think about these 5 stocks? Do you hold any of them, or are you planning investing or doing research on them? Let me know in the comment section below. Hope you enjoyed the video. Thank you for watching and see you next time.